Simplicity is about subtracting the obvious and adding the meaningful. John Maeda. My friends, every day we work to make what we do make sense, be simple, subtract the obvious, add the meaningful, follow price movement. We attempt to hone our minds, our trading skills, all those things on a daily basis. Stay with us, stick with us. You can do this. Let's see what's up in the markets. Things are swinging up. We'll start with the S&P 500. We look at this half-day chart. We had a great trade in a very short period of time, down 3.32%. We captured that in an inverse trade on SH. Hope that you traded that with us. Now what do we see happening? Sort of the remnants after that, things slowing down, slipping sideways. Up for the day overall, 1.44%. Hard to see in these Heikin-Ashi candlesticks after the big down move that gave us the success that we had. Now, we look at where things are on the 2-day. It's red on the STC on the half-day, green on the STC on the 2-day, two down candles. We look at where the weekly is. Weekly is still down. Ended the week actually reaching a little bit higher during the course of the week, but a smaller candle. Above, we've bounced off that 200 EMA, and we're really in an indecision territory, so we'll pay attention as to what is going on. That's where we've been on the week now. We call this the weekly review and forecast. Where are we going this next week? Not sure. We do see that our biggest chart, and as we always like to say, all things being equal, the markets tend to move in the direction of the biggest chart. That weekly chart is above the 200 EMA. We're below on the half day. As we told you, the 2-day is green on the STC. Now, when we look at where it is on the 300 EMA, it is below it. But we do have, again, some push up on that weekly, so we'll pay close attention as to what's going on here on the half-day chart. If we do see things, now we've come up and tested twice, almost 3 times, that 200 EMA. Are we going to just continue to plummet down below it, or are we going to break through it? Don't know. Watch over the course of this next week and see what happens. What do we have happening over the course of this next week? Pay attention to that. We have what? An election, a national election for the control of both chambers of the United States Congress, both the House and the Senate. So, is that important? Absolutely. Governor's races are up. Control in many, many areas is up. So, if the Republicans take things by huge margins, what will that do to the market? It may very well give the market a lot of confidence that it can overcome the disaster the Biden administration has been so far in the Democrats. We'll see. You'll see how the market takes it by what the market does, and we will be ready to profit in either way. So, in your practice trade, so stand by, pay attention, and learn from this, my friends, because 2 years from now we'll have more elections. And 2 years after that, more elections. Again, you learn by doing here. That's where we are on the S&P. What about the NASDAQ 100? Up 1.61%. Of course, we captured in a day, we captured a nice 4.20 down move, 4.20% down move. That worked well for us. We're still trundling down some. You can see we're reaching lower lows morning and afternoon as far as where things plumbed to, although overall up for the day. What we see happening, though, is a slowdown in that down movement. Now, when we look, you can see that the NASDAQ 100 much further below the 200 EMA than the S&P 500. Remember, NASDAQ 100 tech stocks, S&P 500 big industrial, big companies across the board, international, all sorts of stuff. So as we look at this, we will pay attention. Look at the 2-day. It has gone back to negative. It's not green like the S&P is, so more negative movement there. What do we see on the weekly? It tried last week to get above. It also peaked above during this week, but the candle itself below. We see the STC is negative. So there's more negativity in the NASDAQ 100. Got a ways to go before it can break through. So again, this election cycle will be interesting to see how it affects things. Looking overall, much more negativity on the NASDAQ 100. So we'll now move out of stocks. Keep all that in mind as we do get into the course of this next week. What happened at the end of the day? Bonds down 1.68% for the day. We had things go from green to red. Now, when things go from green to red or red to green, I like to see things like you saw here when things went into the green back in the morning on the 25th of October. It went from red and shot up. We don't have it shooting up. We have it going sideways. Not the most exciting changeover. Nonetheless, we anyway initiated the move. We've already put in the box, both our profit and our loss bands. Of course, we set that 135 is $1.35 because if you look over to the bottom left-hand side of the screen, see that 135 there? Let's call that up for you. You can see 135, if you look up a little bit right here under RTA, that is ATR, my dyslexia is coming into play. Average true range at 14 period, you see to the side of RMA, when I line it up here, you'll see it's 135. That's where you set the average true range. You're going to take one average true range, $1.35 or 1.43% of the price as your risk. You're going to double that for your reward to 2.85% or $2.70. That is what we hope to make off each share that we purchase in our practice trade on the down move. You might say, Tom, why would I buy TLT if it's going down? You're not. You're going to be looking at Tango, Bravo, Foxtrot. That is the single inverse of 20-year bonds. And of course, as bonds have been going down, it's doing what? Going up. Isn't that beautiful? We just don't track these inverse funds because we try to keep it simple. And I want to really look at what the price is doing on the underlying asset, not the inverse fund. The inverse fund is set up to mimic the underlying asset. I want to follow that to make my trading decisions. So it rotated over. Keep in mind, we are negative on the 2-day STC and a red candle forming down after things had popped up and slid sideways, died on the vine. And of course, the weekly. This week, we haven't reached the lows that we reached last week. It is a red spinning top showing indecision. It is negative on the STC. So we'll watch this with some care. And again, we've talked about the potential for success here. We've talked about the successes over the last week for both the S&P 500 and the NASDAQ 100. What about gold? This is a stinger, friends. You kept asking me, Tom, why are you just continuing on this? My friends, there are abilities to learn all sorts of things as we do them. We saw what was happening, how squirrely things got in gold, and we have learned a nice lesson here, have we not? Things went down, they then popped up. With things going to green, we could have easily, and most of the time we do, get out when that occurs. Then what happened? It slowed down in the afternoon on Tuesday. Then what happened on Wednesday morning? Popped up, almost knocked us out, got within 2 cents, and then we had crazy squirrely volatility where things plumbed back down at one point. That was in and up high at one point on Wednesday. Could also have gotten out there, but then we were drawn back in on Thursday morning where things just crashed. Recovered some in the afternoon, and then the hammering took place in the morning on Friday. Things shot way past our loss point. Did that early on. Took us out with a full loss and some more. Now, the nice thing was we were only risking 0.88%. Why? Well, that's based, of course, on the average true range. And we were only hoping to make on this whole thing, again, a small amount of profit. It was a mere 1.75%. Well, we lost. This one did not work. We will take credit for the ones that work, and we will also admit when things don't work. But again, my friends, if you're winning just 40% and you're using the always winning method, you are profitable. You might ask, Tom, how does that work? Well, it's 2-to-1 risk to reward ratio. It's balancing your risk based upon volatility. It's understanding what you're doing and following the training. As I'm going to put both the wave technique, I'm going to put the average true range, I'm going to put 3 things, and the always winning method into the end of the show notes here so you understand exactly what I'm talking about and why you only have to be right 40% of the time to be profitable with this method. How is that? You'll understand when you take it. And guess how much it's going to cost you? $1,000, $2,000, $5,000? Absolutely free. Listen, over the course of the weekend, watch those 3 trainings, and there's many, many more. Those will be the ones that will cue you in and get you excited, my friends. So we lost this one. No big deal. Let's move on to where we are. Well, before I get out of gold, let me tell you where that leads us. Now, we are super negative in gold. We're way below the 200 EMA on the half-day chart on the 2-day. It's also squirrely here with the STC. It is also below the 200 EMA. A long way to go to recover. The weekly, also much indecision over the course of this week, still red on the STC. So still a lot of downward pressure on gold. We may yet have an opportunity to jump back in. We'll have to have the STC clear this center band here and reset before we would consider it again. That's where we are on gold. Now, lastly, we'll go to Bitcoin, up 4.5%. My friends, that's like the good old days, isn't it? I love that. We look at where we are on the STC. We're well below the 200 EMA. We look at the 2-day chart. We can see we haven't reached the recent high back on the 9th of September, but we're heading up that way. It's nice to see 5 green candles, really 4 decent ones, heading up. And however, it just went red on the STC on that 2-day chart. Isn't that fascinating? Don't quite understand why. We look at where we are on the weekly, and it's gone from red to green. It did that over the course of this last week. Still has a lot to clear before we get to that most recent high back on the 8th of August. And what did it do after that 4 weeks of climb? Died again. So hopefully we've set a base somewhere around this 1820 mark or so, and we will see things just, again, continue to set that base and spark up. Maybe that's happening now. It could be. We'll see. As we look at where we are on this 24-hour-a-day Bitcoin chart, you can see we got a ways to go on the weekly chart before we clear the 200 EMA on that 2-day chart. A ways to go there. On the half-day chart, we've just been laying on this for quite a while, sliding off of it right now. We'll see as we move forward. We gotta have that base be solid. That is where we are, folks. We do love to hear from you. Reach out to us anytime. cw@chartingwealth.com. Please support us at our Patreon page if you appreciate what we do. Lots of great stuff there for you, particularly the 3-part series, Options Made Simple, the Charting Wealth Way. You want to learn options? We got it for all of our Patreon supporters at any of our 3 levels. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.